gold pulled back briefly but remains range-bound at high levels, with fundamentals taking the driver's seat. Could we see a breakout in the near term? And how will the upcoming US PCE inflation data impact gold prices? Find out more in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Gold has been holding steady near its highs over the past week, but Tuesday's sell-off shot things up. With geopolitical tensions easing and restocking momentum in New York's precious metals market slowing, gold came under pressure. At the same time, weaker than expected US data and uncertainty around trade policies kept buyer in the game. But the big question now, will we see a breakout? And with the US core PCE inflation report coming up this Friday, how big of a shock could it deliver to gold prices? Looking at gold against US dollar daily chart, gold has been graining sideways around $29.40, but Tuesday's sharp drop pushed it below $2,900, closing beneath its year-to-date regression channel. Definitely something to watch. But here's the key takeaway. That long lower week tells us buyers were quick to step in. After suffering its biggest intraday loss in weeks, nearly $66, bulls are already back in action today. It's a tug of war, and in the short term, I see $28.80 and $29.40 as the key battlegrounds. If gold can climb back into the regression channel, that could set the stage for another run higher. Now, what could stand in gold's way, or even push prices lower? First, geopolitics. Some risk premium has come off the table as Middle East entered a ceasefire, and reports suggest progress in US-led negotiations for a Russia-Ukraine truce. Less uncertainty means less urgency for safe haven buying. Second, physical gold demand is showing signs of cooling. While COMEX gold futures inventories have been piling up for months, physical flows tell a different story. Gold has been moving from London to the US, and since the start of the week, the spread between COMEX and Litma gold has been actually narrowing. This is a signal that physical demand might be losing steam. Plus, the rush to front-run potential tariffs, one of the big drivers of recent gold stockpile movement, is fading, which could add to the downside pressure. And as a result, I think we are shifting back to a fundamentals-driven market. So on the macro side, cracks are starting to show in the US exceptionalism story. The S&P Global US Services PMI just slipped into contraction for the first time since early 2023. Consumer confidence is also taking a hit, with the University of Michigan survey showing weaker sentiment and long-term inflation expectations surging to 3.5%, the highest in nearly 30 years. Traders are now pulling forward rate cut expectations from September to July, and with real yields dipping back below 2%, that's really good news for gold bulls. Meanwhile, tariffs are still lurking in the background. The market might be getting a little bit tired of pricing in every headline, but Trump's recent comments on pushing ahead with a 25% tariff on Canada and Mexico, plus the investigation into Chinese copper imports, are still factors keeping gold in demand. So, where does that leave us? Gold is stuck in an elevated range. The Fed is being quite cautious on rate cuts, inflation remains sticky, and Trump's trade policy uncertainty is keeping markets on edge. That means gold's financial appeal tied to real yield and its commodity-driven supply dynamics linked to inventory flows aren't fully aligned yet. Tuesday's sharp sell-off was a reminder that the bears are still out there, but without a clear catalyst, I see gold staying range-bound for now. That's why all eyes are on Friday's core PCE inflation report. Market expect the year-on-year number to dip from 2.8% to 2.6%, but with CPI running hot, a surprise could shake things up. If PCE cools in line with expectations, it could reinforce bets on 225 basis point Fed rate cuts this year, weighing on the dollar and boosting gold. But if inflation stays sticky at 2.8% or even higher, gold bulls might have another fight on their hands. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!